What's up, everyone? It's Guys here, and let's talk about commodities. No, not the word that rhymes with quack, but actual commodities like gold, oil, and agriculture. Because even though most people associate investing with stocks and bonds, there is actually an entire market dedicated to trading raw materials that could potentially make you a lot of money. So here's a breakdown of everything you need to know from start to finish. Alright. So first, it helps to understand exactly what a commodity is because, believe it or not, it's not just limited to oil and gold. In fact, the term commodity refers to any raw material or primary agricultural product that can be bought and sold. This includes precious metals like gold and silver, oil and natural gas, coffee, wheat, corn, cotton, and livestock like cattle and hogs. These are all considered to be commodities, and they're generally divided into two categories. First, we have hard commodities, which are generally extracted from the earth and have a uniform composition throughout. This would include things like oil, gold, diamonds, and iron ore. And then we have soft commodities, which tend to be more perishable and grow naturally. This would include things like wheat, coffee, sugar, and orange juice. As far as how these are actually traded, virtually all commodities follow a standard unit of measurement. For example, oil is bought and sold in barrels, gold in ounces or 400 troy ounces, and wheat is based on bushels. The way that commodities are priced is entirely dependent on supply and demand. That means if there's a lot of supply and low demand, prices will go down, but if there's low supply and high demand, prices will go up. That's why sometimes you'll hear headlines that say something like wheat futures rise on hot, dry weather in the US plains, or gold futures drop as dollar gains safe haven status. It's really just supply and demand. Now, should you consider adding commodities to your portfolio? Well, as with anything else, it depends on your goals, your risk tolerance, and your time horizon. Generally speaking, commodities are considered to be a good inflation hedge because they tend to increase in price when other asset classes decline. They also offer complete diversification because they don't typically move in the same direction as stocks, real estate, or bonds. This is why many investors choose to allocate between 10 to 25% of their portfolios to commodities in order to balance out the risk. Okay, great. Then what are some ways that you can invest in commodities? Well, here are 3 options. Number 1. You could invest directly by physically buying and holding the commodity itself, like purchasing a gold coin, for example. Number 2. You could buy futures contracts, which essentially allow you to agree to buy or sell a commodity at a predetermined price on a specified date in the future. Third, you could also invest in an exchange-traded fund or an ETF that specializes in commodities. This would give you a simple way to gain exposure without having to worry about the logistics of holding and storing an asset. Alright, now when it comes to this in the investing world, there's a bit of a saying that goes, sell in May and go away. The idea is that because commodity prices tend to be the strongest during the last half of the year, it makes sense to take profits and go away until next May. However, studies show that this strategy reduces returns and increases taxes without providing any additional benefits, so feel free to ignore that advice. Instead, you should focus on supply factors, global events, and of course, demand. For instance, if there's a bad harvest, that would likely cause agricultural commodity prices to increase. Or if tensions rise in the Middle East, that could cause oil prices to spike. Of course, commodities aren't completely immune to a bear market either. In fact, since 1997, the average drawdown during a recession was nearly 26%. So keep that in mind. Now, even though I personally don't have any commodities, I do plan on buying some natural gas in the future. But as far as my thoughts on the subject, I think they're a great way to diversify, especially during times where everything else is falling. Just keep in mind that every investment comes with its own level of risk and return. So, you want to make sure that you do your research and you fully understand what you're getting yourself into before you invest. But overall, hopefully this video gave you enough information to decide whether or not commodities are right for you. If it did, please give it a like. And if you want to see more videos like this, Feel free to subscribe and turn on notifications. Otherwise, thank you so much for watching. Have a great day.